Good morning, everybody. It is Tuesday, April 29th, and we are heading into month end for April here and ahead of a data-filled week. First, before we get started on our indices, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, if we start by looking at our ES for today, the biggest thing we want to pay attention to is our line in the sand. We mentioned that yesterday, where the minor line in the sand was and the major line in the sand, and we are still below our major line in the sand, which has come down to 55.91. But yesterday we held our minor line in the sand at the 54.89, and it moved up to 91 at the open. That was our low of the day. So right now we are just stuck in between those. We are likely going to test our major line in the sand in the next day or so ahead of NFP. But we are looking for rotational price action today from 55.86 to 55.08 half with our pivot at 55.48. And we've seen this move up the last few days. And if you look at the bottom here, you can see the volume is really decelerating. The last few days have been down 23.5%, down 5%, and down 10.5% in terms of volume. So this up move is the month end markup. It is that painting of the tape and that deleveraging as we are not seeing initiative buying supporting this move. So again, we are looking at this more as a bear market bounce, and as long as we're under our line in the sand, we could make a push up to 5650 to 5700, and that would still be our bear market bounce. Again, we dropped 20% from the peak, so that's what we're looking for here now is a multi-month, multi-week kind of move. But in bear markets, we also see the biggest up move. So that's what we've been playing is this giant washing machine. And from a flow standpoint, we mentioned this yesterday was we didn't have the protection. Yesterday, we did see the protection come in ahead of Trump's four speeches yesterday or four events yesterday that ended up showing up on the calendar, and people started to buy that insurance, and we saw the market go down into that and then right back up as those events started to come out. So that was the capturing all of that premium on the insurance. And today we do have JOLTS as well as consumer confidence at 10 o'clock, and then we have Lutnick speaking at 2 and Trump at 4 o'clock ahead, along with Visa and Starbucks earnings. So we will see this move back up, which will put that downward pressure this week. We are looking for each of these days to get into our red zone. If they do, then that will help put a floor in the market. If they don't, then that puts more risk in the market. And tomorrow we start the Mag 7 earnings again. And unlike last week with Tesla pulling guidance and Google not guiding ahead, we will see guidance from Microsoft, Apple, and Amazon. Those are likely not going to get pulled, so we will get a better gauge for the next few weeks and months as the tariffs and those effects will begin to show up and take hold. So on the flow side, we are looking for some downward pressure to come in. We understand why there would be selling and when there would be selling. And for our students, we can monitor this minute by minute in the trading day to better capitalize on this. But just be aware that there are going to be selling pressures coming in as people buy insurance in the market. Market comes down, those insurance premiums cost more, and then once there's no more demand for insurance, we go back up if we are overinsured, again, for the insurance providers in the market to make their capital. And so that's what we watch to play out here. And then on to the NASDAQ here. So we have our rotational zone today, 19,665 to 19,325, with our pivot at 19,502. Our upper target, if we do break out of our rotational zone, is 19,835, and our major line in the sand is 18,916. You can see that below us here, and that is providing more support in the market and dampening some flows. But be cautious if we break that, as that's when further downside will perpetuate, and that's when we can see that this bounce is likely running out of steam. That's what we're going to watch for because the ES and the SPX are underneath the line in the sand, the NASDAQ is over. So we're going to watch um, XLK and Tech, Mag 7 stocks for kind of that signal that the upside is done. Today, our lower range expectations end at 19,053. So again, you can see that here. That green down here is above our line in the sand. So we're not looking for that change to happen today. That's not really in the cards. But similarly to the ES, we are seeing that the move has been going on decelerating volume. And that has been negative 18.33%, negative 1.98, and then down 12.44% yesterday. So again, we're seeing these up moves, 1 to 2 to 3% moves on a lot less volume. And so as we run out of demand, that will pop this bounce. And again, we follow our key levels for those points. And some other key levels, we got this from one of our subscribers yesterday asking about other areas to watch on the NASDAQ. So we put this out ahead of Globex yesterday at 5 o'clock, 19,316, 19,427, 633 half, and 747. And these two here, we missed the low of Globex by about 20 points and the high of Globex by about 2. So if you were trading last night, you could have had an 8 or 9 to 1 trade just using these two levels with, if you're willing to take a 20-point stop and cut yourself short about 2 points on that upper end. We're watching these levels and these key areas. Again, there are other major points in between our rotational zones, and we follow some of those intraday through our other indicators here that you guys have access to. And then also down here, and we have others on our own as well that are reserved for our students that are also updating real time, minute by minute. So if you are interested in courses and gaining access to those, you can find that as well on the website. But please utilize this website as these tools for our professional subscribers are here for you. And then you can also ask questions in our professional room. Now on to oil. Oil is below our line in the sand, which is clearly not signaling any geopolitical risk. And inventories come out tomorrow. So we will watch for that. We don't spend very much time under our line in the sand typically on oil. So we're going to watch for signs of bottoming in the next couple of days. We are looking for rotational 62.75 to 61.05. And underneath 61.05, we'll target 60.20 and 59.69. If we hold our rotational zone or get below and come back in, then our first target is 61.85 is the pivot on the way up to our upper rotational zone at 62.75. And lastly, gold is consolidating ahead of NFP and the major data this week. So our rotational zone is 32.89 to 33.48 for this consolidation. We will look for gold to break out later on this week, either Thursday ahead of NFP if the data gets leaked early, or on NFP. And NFP is likely going to be more dovish or bullish for rate cuts, with inflation also on its last tick down this next month, which will get reported in a couple weeks, and that will set the stage for a Fed rate cut possibility. You can trade that on the 2-year futures as a Fed policy proxy. So we look for yields down and bonds up, which played out perfectly yesterday. Buying the 2-year futures and seeing the yields come down as traders are betting on those rate cuts. For gold, you can also use the 10-year as a proxy for growth and for a correlation. But for the correlation charts, again, those are reserved for our students. But on gold, we can see we are under VWAP. We couldn't get back over it here in the overnight session. And that's what we're going to watch as we hit our upper rotational zone. So we called out last week on Friday where that rotational zone, that buy would be in the 32.68 to 70 area. And we made our move up to our upper band, so 60 to 70 points. And now we are failing VWAP and coming under, but still holding our middle pivot. So that's how you want to be utilizing these tools and these indicators that you have access to for our professional subscribers. And again, on gold, we're looking for this, trading these edges at 33 we'll round up and say 50, 48 to 50, and then down to 32, 89 to 75. That's going to be our lower rotational zone here that we're looking to stay within for the next few days. So that's what we're going to be watching for today. Again, downward pressure likely coming on the ES and the NASDAQ as we see those insurance flows begin to come in. We do have a lot of catalysts this week, not just today with um, ADP, or I'm sorry, with JOLTS. We have tomorrow with ADP, and then with earnings. And then Thursday, we have earnings again. And Friday, we have NFP. So we have a lot of reasons for traders to start protecting. But again, everybody waits until the last minute to start buying that insurance. So we'll see those flows come in more likely at the open. Because if you want to go back to some of our older videos, we've laid this out many times. This is a very repeatable pattern because it's the business side of the market. And there are still, even though a lot of money and liquidity has come out of the market, there are still billions that have to be protected. And that will lead to people buying insurance because they don't want to lose all their money for their clients on that off chance, which then this perpetuates that down move on the buying of the insurance, the up move to devalue the insurance. So those insurance providers in the market, the business side of the market, can make their money, and that puts that floor in on that data release. Once all of that insurance flow comes out, then we can resume any downside possibilities. But we really watch this closely. So just be aware that there is the chance and the propensity for downward pressure early in the day. Maybe for Lutnick at 2 o'clock, we'll see. And then we'll see if Trump comes out with anything else that he wants to say during the day, as that is always something that if it's a known event, as there were yesterday, people will buy. If he just decides to make an impromptu conference, then there won't be that protection, and that's when things get a little more risky. So that's what we're looking at today. And as always, guys, be sure to control your risk. That's the number one thing that we control in this game, and we can't emphasize that enough. If you control your risk, you can survive. And by surviving long enough, you can learn and grow and actually make it in this. You're not going to make everything that you ever need in life in a single day. So the goal is survival. So control your risk. Learn to operate at your own edges, define your edge in the market, and you'll be able to make it in this game. So have a great day, everybody, and we'll be back again tomorrow.